Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CITIC FAMC interim report. China CITIC Financial Asset Management Co., Limited, offers a diverse range of financial services and businesses, including distressed asset management, financial services, asset management, and investment debt to equity, swap assets acquisition and disposal, securities, dealing financial bond issuance, interbank borrowing, and lending, commercial financing for other financial institutions, bankruptcy management, consulting and advisory services, finance, investment, legal, and risk management, asset and project evaluation services, approved asset securitization, business financial institution custody, business closing and liquidation. These services cater to both financial and non-financial institutions, providing a comprehensive suite of solutions for managing assets, investments, and financial operations. The mystery of CITIC FAMC's skyrocketing stock price. There appears to be confusion regarding the company name, CITIC FAMC. Despite searching through financial data and news, no evidence suggests that any publicly traded entity under the CITIC umbrella has experienced a 94.44% stock price increase in the past year. The closest related entity, CITIC Pacific Special Steel Group, saw a modest 11.81% total return, price plus dividend, over the same period. It is unclear what specific news or events could have caused such a dramatic surge in stock price for CITIC FAMC. Without further clarification on the company's identity, it is impossible to pinpoint any particular factor contributing to its supposed skyrocketing stock performance. The primary drivers of revenue growth for a company are multifaceted and varied. The year-on-year increase in total revenue by 21.1% is a significant contributor to growth, page 13. Additionally, gains on investment in associates, plus 203,127.6%, and additional acquisition costs, plus 52.9%, have also driven growth, page 18. New investments have yielded returns of plus 43.6%, while realized income from disposal of assets has increased by plus 180.8%, and unrealized income by plus 132.8%, page 41. The operating units in mainland China and Hong Kong SAR have been a primary driver of growth, as well as the asset management business, plus 14%, and securities and futures brokerage business, plus 3%, pages 82-86. On the other hand, revenue decline is primarily driven by the development of properties, minus 37.2%, income arising from operating leases, minus 8.3%, and others, minus 47.5%, page 18. The cost of property development and sales has decreased by minus 31%, while others have seen a decrease of minus 21.8%, page 20. The fund management business has experienced a significant decline of minus 94%, as well as revenue from the development of properties, minus 37%, income arising from operating leases, minus 8%, and government grants, minus 55%, page 86. The company's ability to generate positive operating cash flow is inconsistent. While there are instances where the company achieves a positive operating cash flow, such as in 2024, $64,387,028, and 2025, $27,028,530, it also experiences negative operating cash flows in other years. The presence of both positive and negative operating cash flows suggests that the company's financial performance is not stable. The company's debt level and interest expenses have undergone significant changes. Notably, total debt has increased by 6.7% from RMB 706,627.5 million to RMB 752,294.4 million. However, interest expense has decreased in some instances, such as a 12.3% decrease from RMB 16,404.7 million to RMB 14,388.7 million. Conversely, there was an instance of a significant increase in interest expenses by 20.3%. Overall, the company's debt level and interest expenses have shown varying changes across different pages, indicating no consistent trend. The company's financial performance varied across different segments and regions. The distressed asset management segment stood out as a strong performer, with significant increases in income, plus 58.3%, and profit before tax, plus 522.4%. In contrast, the asset management and investment segment struggled, experiencing substantial declines in income, -85.1%, and profit before tax, -305.6%. These contrasting performances highlight areas of success and concern within the company's operations. Management is optimistic about the company's outlook, citing positive growth prospects. Key strategies include intensifying asset promotion and adjusting asset structure to reduce distressed debt assets, focusing on high-quality development of acquisition and disposal business, and seizing policy opportunities, expanding relief and revitalization business, and fixed-income investments, leveraging financial rescue and countercyclical adjustment functions to support national strategies management, expects continued growth. With new investment costs increasing by 43.6% and revenue growing by 65.5%. The company will focus on key sectors aligned with national strategic priorities, promoting transformation and upgrading of traditional industries. The company has a history of paying out dividends to its shareholders. Specifically, in the 6 months ending June 2025, it distributed Rm 101 million in dividend payments. This demonstrates the company's commitment to returning value to its investors through regular dividend payouts. That concludes the financial summary for CITIC FAMC. Feel free to comment below, and I will be happy to answer them when possible.